The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon,
Akib,
everyone, and welcome to today's webinar on client profiling and pre-audit checks. My name is Akif, and I'll be your host for this session. First of all, thank you all for joining us today. We have an informative session lined up for you, and I hope you are as excited as I am to dive into the topic. First of all, can someone from the audience please confirm if audible?
मनोज मुझे ना मेरी आवाज वापस आ रही है. It's getting quite distracting.
okay, so I'll just take over.
Okay.
Can you hear me there?
Yeah, I can hear you.
All right, okay. Hi, everybody. We're having some trouble in communication, but what I'll do is I'll just take over from here and just want to know whether all of you can hear me or not, and then I can start the event. If one of you can kindly enter in your question box that you can hear me, I can proceed from there on. It seems to me that everything is okay. All right, so yeah, looks like all is fine. So in your panel, you will see that there is a box. If you can't hear me through the computer, you need to ring that number and enter your access code, and that will take you to a number where you will be asked to enter your PIN. And once you enter the PIN, you will be able to hear me. Now, I'm happy to take your questions after my presentation, which should be about for half an hour. Now, some of you know me, and I worked in SMSF space for quite a bit of time. I used to work for someone, then I had my own tax practice of almost 19 years, and today I look after trust deed and all the products, SMSF products of trust deed. And the other day I was checking that we have sold almost 80,000 SMSF trust deeds. So which means that almost 15% of all funds are currently using our trust deeds, which is quite an achievement, I would think, for Battalion Legal and for us, because we can see that there is confidence in our product, and we have been referred by many accountants to their trustees. So today I'm going to use Menti. It's a learning platform. So if you have two screens, on the second screen, I would request you to log into Menti, which is www.menti.com. If you're using a mobile phone, which I would highly recommend, is to just take a picture of this QR code. And once you go in Menti, I request you to enter the code 68953571. And once you're logged in, on the bottom right-hand side corner, you will see there'll be three stickers. If you can do a thumbs up to say that you have logged in, I'll have some confidence that some of you are in and you'll be able to enjoy the presentation in totality. And it's a bit of a learning process, and my efforts would show instant results, because some of the questions which I will ask you will force you to think on what you would do in certain situations. And I've noticed that the learning process is more or less permanent, because then you would remember that you entered. And also uh, you will not have the slide running in the background and working. I'll be asking you many questions as I proceed through my various slides. Okay, today my topic is client profiling. So you are a superfund auditor and you are about to begin an audit, and what are you going to check? You will look at the SMSF financial statements, and obviously you are being referred by an accountant who is a trusted, capable accountant, and you're working with him for many years, and he has, let's say, inherited a new super fund, and he has sent you that super fund for the first time. So you have to profile that super fund. On your left, again, you will see that I have put the QR code for Menti. So in case if you've missed it, so please use that. So by client profiling, I mean you will look at whether the trustees are individuals or it's a corporate trustee. You will look at the date of birth of each member just to think about, how old they are, what type of investments they have, what is the address of the fund, whether it has an ABN or not. You'll go in look up and check whether it is still registered as a complying fund or not. And then you will just flick through the trust deed, the governing rules of the fund, see whether it has been prepared by a solicitor or not. I've seen many deeds, they don't even have the name of the solicitor. So which kind of like sends some warnings. And if you see trust deeds coming from, say, us or ClearDocs or other providers, you get some sort of assurance that the fund has been most likely created with the proper set of governing rules. And then you check the financial statements to check whether the fund is in pension or not, or whether there are any contributions, what type of incomes there are. Are you going to counter any limited recourse borrowings? And what could be in your mind you're thinking about, or setting a profile, or setting up a basic bones of that super fund. You're trying to figure out, how I'm going to check the self-managed super fund, and what are the compliance issue you are most likely, expecting, or which you can encounter. So you're looking at the fish tank from outside. You're looking at what's in the fund. Then you think about the engagement letter which you have issued, whether the trustee representation letter has been received, and you will evaluate against your engagement. And under the various representations which the trustee has made in the trustee representation letter, just to remind, just going over these points, that the preparation of financial report is the responsibility of the trustee, and whether it has been approved or not. And I've noticed many times the accountants will send you an unsigned set of accounts for you to audit. They'll send you all the audit evidence, but the actual financial report is not signed. And some auditors are okay with it, and some don't even want to commence an audit But it all depends on your workflow and your arrangement with the accountant. And many a times I've seen that auditors are happy to commence the audit with the unsigned, or I call them draft financial reports, but they'll not issue an audit report till they have received the signed version of the financial statements. But as long as the trustee presentation letter, representation letter, claims or acknowledges the responsibility of any internal control, and the trustees always say that we have a plan in place so that there is no fraud or error which has happened. You're more or less safe to commence your audit. And as an auditor, you're not responsible to dig out any frauds. That's not in your engagement anyways. So as long as that rule has been sorted out, that the trustee has followed the CIS Act and CIS regulation, you can more or less commence your audit with what you see. Now, those of you who are not yet logged in or joined a bit late, just to tell you that we are using Menti today, menti.com. If you can please, with your mobile phone, scan that QR code and enter the code 68953571, then you will be able to participate in some of the questions which I will be putting forward in my coming slides. Now, going forward, it's very important to understand who prepares the trustee representation letter. And just to understand you as an audience, could you please log into Menti and tell me, is the trustee representation letter provided? So if you look into your screen, you will be able to vote. Right, so some of you don't use your own trustee representation letter. Some of you just use the one which the trustee provides to you. I think it's very dangerous to use the trustee's version, although it is signed by trustee, but traditionally, the auditor issues one. And I've never seen trustee objecting to signing your version of the trustee representation letter. And usually what would happen is that the accountant will ensure that the trustee rep letter and the engagement letter is signed by the trustees and sent to you along with all your documents, all your audit evidences. Now, as far as the pre-audit checks are concerned, the trustee can claim that they are not disqualified, but then it is your role to check whether they are really disqualified or not, and there is a disqualified register which comes out. And if you use online SMSF audit, as soon as you enter the name of the trustee, we check with the register whether that name appears in the disqualified register or not, and we'll alert you straight away. But how do we know if the trustee is disqualified or not? Because it takes a while, before the trustees' names appear on that register. So just if you can type in on how do you check, like, if you're auditing a fund, so how do we know if the trustee is disqualified or not? I know you check the disqualified register, but are there any other processes you can share with me and with others. Uh-huh. Okay, I can see some of the answers flowing through. Okay, so most of us would just fall back on the representation letter and assume that they are not they are not disqualified. Look, if I get a representation from the trustee to say that I'm not disqualified, I would be happy with that, because I'm not going to proceed in all directions and check the register. And even if you check the register, it gives you limited information. It just gives you the name of that trustee. And if the name of the trustee is Chris Brown, it could be another Chris Brown, who could be disqualified, and not the Chris Brown, the fund which you are auditing. The next thing you will check is about the sole purpose of the fund, whether there have been any withdrawals or not, or whether there are any collectibles or not, and things like jewelry, cars, collective cars. These things are bit shady, and takes a bit of longer time to check whether any withdrawal has been made, or whether any today benefits have been used by the trustees or not. So these are the things you will need to check right at the very beginning. And of course, we are not talking about how to check collectibles. We are just saying that you're just checking whether the fund has those things or not. And one thing which I always check is if the fund has met the definition of self-managed super fund, which is in section 17A of SIS Act. And it could be quite difficult for a single member fund, because many a times you will see that when there are individual trustees, there is another trustee in the fund. And to check who is that other trustee in the fund. So I'm just copied the SIS Act 17A2B1 for individual trustee. The member is one of two trustees, of whom one is the member and the other is a relative of the member. So in your Menti, can you check who is okay? I'll give you some time to think about this. Is the brother's wife okay? Is your girlfriend okay? Can she be the other trustee of the fund where you are a member? So we are talking about a single member fund here with two trustees. All right, so I'll just wait a while and allow you to enter some more information. Yeah, so I'm talking about grandchild's ex-wife. Is she okay? Can she be the other individual? So I'll just start the timer here for 30 more seconds. So if you can respond and let me know what you think. I haven't got even one vote for the third one, the grandchild's ex-wife. Okay, brother is okay, and the spouse is also okay, and the spouse of the brother is also okay. So brother's wife is okay. And as far as the girlfriend is concerned, if she has a relationship with you, and if she would be, she lives with you, and you have a relationship as a spouse and interdependent, then she would be included as well. Now, as far as the grandchild ex-wife is concerned, you won't believe it, that's true too, because grandchild is included and spouses and ex-spouses are also included. So all three can be the relative of the member when we are setting up the self-managed super fund. This is just to show you on how much open the SIS Act is as far as the second individual trustee is concerned. Now, there could be complicated trust deeds, but what we need to do is we need to check the trust deed and then compare what it allows you to what the fund has done. And you should also be checking whether there are any non-arm's length transactions or expenses, because at all times, the trustees have represented that they have acted honestly and in the best interests of all the members. And one of the things which comes in the best interest of the member is the allocation of income. And if you look at SIS regulation 5.03, which is in the audit report, you will see that all allocations to various members should be in a reasonable manner. Now, as far as the trust deed is concerned, I just want to seek your opinion that if you are faced with a trust deed, which is dated prior to 2017, are you okay to audit that fund, or would you have any issues? And obviously, I understand that some of you are saying that it's okay if it's an old deed. Just to remind you, in 2017, there were certain rules which were introduced, and that was the transfer balance account. So whenever you see someone going on pension, you will see that deed which is prior to 2017, you would have certain objections to using that deed because it would not have the provisions of having a limited amount going into retirement phase. So just to let you know that some of the older deeds may need to be updated because they need to provide certain rules. So my rule is that if the fund is in pension phase, make sure the deed has been updated after 2017. And I will quickly flick through the pension rules and see whether the deed allows an account-based pension, and it limits the amount of money which has gone into retirement phase. Now, as far as allocation of income is concerned, we need to check on how trustees can allocate income of the fund to members. I would like to get your response. I know daily balance can be one method, or 50-50 can be another method. There's another method where the more income is given to person who has higher balance. And now with the division 296, where you cannot have 3 million or more in the fund, otherwise you could be subject to further 15% tax at individual level. It will be wise to give more income to the member who has got less balance in the fund. So could you type into Menti and think, on what would be acceptable to you as an auditor of the fund? I have one response. Oh, thank you. So I have another response apportioned according to closing balances, proportional to member balances. I think that you mean is possibly daily balance method, and pro rata probably would mean that. What about some assets? It's possible that if there's a husband and wife team, some may claim that these assets are mine, so any income coming from that particular asset could belong to that particular member. So there are various methods which can be acceptable to the auditor. It's not a huge thing unless and until there is exempt current pension income where there is one member going on pension and one in accumulation. As far as the ECPI is calculated correctly, it does not really matter on who gets the income. As far as SIS regulation 5.03 is concerned, they say that it should be a fair and reasonable manner. So whatever that fair and reasonable means to you and to the various members. The next thing, the trustee represents whether the fund is an Australian fund or not. All the members are in Australia or were in Australia. If there were any contributions made on behalf of members who have lived overseas, and whether the fund remains a resident fund for the year, because if there's contributions received, there is a 50% rule that the members should have remained in Australia and not been overseas. The next point is you will look at the investment strategy of the fund, and this can be very a funny document because many trustees and accountants don't take it seriously to an investment strategy. But as an auditor, we need to compare the assets of the fund and we have to match it to the investment strategy of the fund. And we should also check whether there is a minute by the trustees to, and they have considered of buying insurance for the various assets and for the members of the fund. Now, just to check with the investment strategy of the fund, I have a question, regarding that, and the biggest question I have is, on how, the valuation is considered in the fund, on how various, assets are held. And the tricky ones are investments in unit trust and obviously property. If it is a listed share, then that's pretty easy to check on it. But the problem is unlisted unit trust or in cryptocurrencies. I just want to see how you react to those. So my question to you is, when you're auditing a fund, when you see that the fund has invested in unlisted unit trust or in cryptocurrency, I do the following. Item number one is do nothing. It's not my role to alert the trustees because I'm not engaged to make any comments on what they do. And some of you have an opinion on unlisted shares. You'll make a comment of it in the management letter. And some of you may qualify it in the part A of the audit report as well, because the valuation could always be a problem as far as the unit trusts are concerned, because the underlying assets in the unit trust could be very different. And as far as cryptocurrency is concerned, you always take it to the market value on on 30th of June. But when you are auditing the fund, your audit is usually 2 months or 3 months or sometimes even 8 or 9 months after the end of the year. And when you look at the valuation of cryptocurrency at the time of signing the audit report, it could be very, very different than what it was on 30th of June, the accounts which you're auditing. So that could be a little bit of a problem. Now, if there are assets in the fund, we as auditor we need to check whether there is a lien on assets. I think it's this regulation 13.14. In the audit report, we need to check whether the title search is clear, and we need to check the asset, ensure that the valuation also is an issue. But as far as the title is concerned, is to check whether there is no mortgage on that property. Now here I'm seeking an opinion from you that who you think can prepare a valuation report for a residential property. And I have a response, and you say anybody, but could you be specific? Because I've noticed that some real estate agents also provide a valuation report. So what would you be happy with? Would you insist a licensed valuer provides a valuation report? Or let's say if there is a fund which has got 80 or 90% of all assets in one property only, then it could be quite risky, because if that valuation is incorrect, or if it is wrong, then obviously it will have serious implications. So you may not depend on the trustee's valuation, and then you could request the trustees or the accountant to provide a better estimate of the market value of the asset. Now, that market value is not one figure, because it could be very different. And if you use 2 or 3 real estate agents, you'll find that each real estate agent would have their own opinion. And even independent licensed valuer will give you a range from one figure to another figure with some sort of confidence that it is closer to this figure to another figure. And what they look at is the various properties which have been sold in that area of that size. And they also look at what are the properties which are available for sale at the moment. And again, at the moment means at the time of the report which it was prepared under, and your your valuation, your audit could be incorrect, because by the time you are signing it off, the valuation may have changed. The other day I was reading that Sydney has seen 8.8% increase in residential valuations. So if the fund had $1 million or $2 million worth of asset, that 8% could be quite a material amount. So I think one value is very difficult to to vouch for. And some of you might think that I mean, imagine if the valuation of ANZ Bank shares is wrong, or which and then you will definitely make a comment on it on part A of the financial report, that it was $24, but the trustee has used $25. so that $1 may make some difference and may warrant you to qualify the audit report, but say a 5% difference or uplift or decrease in value may not have that effect. So what I'm trying to say to you is this, that I'm just telling you how I look at it. Whenever I see a property in the fund, I look at the valuation report, and then my judgment is that I will always qualify the audit report party to say that although I have a valuation report, but I'm not confident that that would be the selling price or that would be the market value of the property. And my reasoning is that the date on that report was sometime 6 months back, and today the value could be higher. So I don't agree. So I always not agree with the valuer, because at the time of signing the report, although the the financial statements which I'm auditing on is on 30th of June, so I do not know what the value would be, and it is uncertain as well. And we hear about stories even in the auctions that the property sells at a very different figure than what is actually expected before the auction. Now, now it's very difficult to quantify the market value, and the sad part is that value is going to be disputed a lot more when Division 296 gets activated from 1st of July 2025, because any change in unrealized value, and there will be a lot of dispute between the accountant and the auditor, where the trustees would be putting it a lower figure and supporting it with different valuers, whereas the real value could be very, very different. Now, the only way to get a true valuation is actually auctioning the property, and that could be a bit stupid for audit purposes. You're taking your property on auction every year to find out what the true market value is, but that's in my opinion is the true value of that property. And if I'm going to pay tax on it each year, then for my fund, I'm going to dispute it every year with the valuer. Okay, so this is something which will become a very big issue come 2 years from now, because we are auditing 2024. These taxes are applicable on member balances on 30th of June 2026. So just to warn you that all these fights are going to happen in 2 years from now.